Hey guys, it is Julie here with JT.Wealth. Today we are on part 5 of our dividend investing series. So let's get into it. Okay, welcome back guys. Like I said, today is part 5 of our dividend investing series, where we are investing $50 per week into our M1 Finance dividend portfolio. If you don't have an M1 Finance account and you're looking to sign up, make sure you check out our link down below in the description, which will help you get 10 free dollars with your initial contribution. So today we are focusing on those long-term goals of this dividend account, and that is being able to receive at least $2,000 per month in passive dividend income within 25 years. That focus is really on it being passive income. So this is recurring dividend monthly income that you receive for doing nothing. You'll be earning it while you sleep. So if you were to start this series when you're 20 years old, by the time you're 45, you could have an extra $2,000 a month coming in for doing nothing. Now, I realize this is unlikely to be enough to fully retire on, but it's definitely a nice piece of extra income to have. As you may already know, we are not doing this dividend investing challenge alone. So doing it alongside us is Sam from My Financial Friend and Logan from Logan Fisher. Now, these guys are doing different amounts than us. So Logan is doing $25 per week and Sam is doing $100 per week. So we're just trying to give you that nice range there. So no matter how much extra money you have right now to invest, there is a series for you. Okay, so this video, I'm gonna go through all kinds of different calculations here and metrics that I use to do projections for this account. I'm gonna show you a best case scenario, a lower end scenario, and our average most likely scenario as well. Before we get into all of that though, I want to give you a quick update on where our M1 Finance account is sitting right now. So week 5, our current value is sitting at $252.64. Our gain is $3.51 so far, with a return of 2.66%. Our holdings in here breaks down as follows. So we have 8 stocks currently. That is our Navient Corp, our Invesco S&P 500 High Dividend Low Yield ETF, Realty Income Corp, 3M Co., Walgreens Boots Alliance, Pfizer Inc., AT&T, and Shaw Communications. Okay, now let's do some math. So I did run through a pretty rough projection in part 1 of this series as far as our goals with this account. That was using very generic numbers, if you will. So now that we have 8 solid stocks in our investment portfolio, I wanted to rerun them using more accurate numbers to give you a really true projection of our goals. So to do these calculations, I am using MarketBeat's Dividend Calculator. I really like this one. I just find it easy to use. It lets you put in a lot of different metrics such as your dividend yield growth, annual stock growth, the dividend reinvestment plan option. I find it very user-friendly. Many calculators out there, so just find whatever feels right to you. So for these projections, I am looking at our portfolio as a whole instead of doing calculations on each individual stock. So in order to do that, I needed to get some averages that I could use. So I went to Excel to do this. So on my Excel, I outlined a few different factors for our 8 current stocks. First, just being the current dividend yield. So this was a simple one, just took the average of all 8 dividend yields, getting about 5.10%. Now, I am considering all of these stocks to be equally weighted for this calculation. So I know that's not 100% accurate, as I showed you that snapshot of our M1 Finance pie, and some of them are about 16% of the pie, with the lowest at 10. But considering that this is going to be over 25 years, I know those weighted averages will vary as we continue to contribute and certain stocks perform differently than others. So next up was finding the average of our dividend yield annual growth rate. So how much those dividend yields are increasing year over year. Now for this, I found Seeking Alpha to be a great resource. On their site here, you just search up your stock, go into that dividend section, and you will see the dividend growth. It's going to provide you the 1 year, so the trailing 12-month rate, and then the 3, 5, and 10-year compound annual growth rates. So they already have them in annual growth rates for you as well. To get an accurate representation, I did take the averages of the 1 and 3 year rates to compare, as these were typically more conservative as well. And I always like to stay more on the conservative side for these types of calculations. Now, the next metric I worked on gathering, I would say was definitely the trickiest, as I'm trying to find that compound annual growth rate, but really also to find a fair representation of this across each of the stocks. For this, I used the CAGR calculator from the online investor. So you simply enter your stock ticker, select the time period you want to look at, and then hit calculate. Now for this metric, I calculated multiple different averages ranging from 25 years, 15 years, down to 7 years. Obviously, the longer the time frame, the better that average return is going to look like, because it's just had more time to ride all those highs and even out all those lows. So I looked at 15 years as well, just to get a different variation, but still include the 2008 crash, and then 7 years just to look at a more recent, shorter time frame. So the calculator will give you this chart, and please note that I was using the bottom chart results there. So this is the one that shows the dividends not being reinvested, as those dividends will be included by our market beat calculator. So I wanted to make sure that we didn't count those twice. Okay, enough of that boring fine print. Now let's take a look at our best case scenario, our worst case scenario, and where we think we'll actually end up. Best case scenario, guys. So our basics there, we have our $100 starting principal, annual contribution of $2,600. So this has that annual dividend yield of 5.1%, but our very high annual dividend increase per year of 4.3, and the higher end with our 25-year average annual return of 5.34%. At those impressive returns, our 25-year balance would be about $475,000 and be producing you $73,000 in annual dividend income. That is over $6,000 per month. Now let's take a look at our worst case scenario, if you will. For this one, I slashed our expected annual dividend increase to 1.5%. So that is almost half of our lowest average, which was about 2.83. So really low balling it on that one. And then taking our lower expected annual share price appreciation to 4.86. At this rate, we are hitting about $275,000 and almost $21,000 per year. So that's about $1,700 and change per month in dividend income, a little bit shy of our goal. Now let's look at our middle of the road, most average return expectations. So on these calculations, we are using that annual dividend increase of 2.83%, and the expected annual share price appreciation, I used 5.05%. Now that is an average of the 25-year, 15-year, and 7-year annual returns. These rates gave us about $343,000 in our ending balance and an annual dividend income over $36,000. So that gets us at $3,000 per month, which is 50% above our original goal of $2,000. Now, to me, an extra $3,000 per month in dividend income is nothing to sneeze at when you consider that the average Social Security income is about $1,500 per month. So you're getting double that. With any of these scenarios, if you look at these charts here, you can see the most important period of growth is in those last few years. So that is where that dividend reinvestment plan really makes an impact and grows your account by those dividends reinvesting every year. So this is the power and effect of long-term compound growth. And that's why my most important piece of advice when it comes to investing is start now. Start right away. Even if you don't think that you have enough to put in, start with a little bit, because time is going to be your best friend when it comes to growing your funds. So that is our update on our dividend investment account, and just giving you guys some idea on our goals for it and how we are coming up with those numbers. So please leave a comment down below and let me know what you think. We still are looking at adding a couple more stocks to this portfolio. So I would love to hear some of your favorite dividend stocks and what you think we should invest in. As always, please make sure that you are subscribed to the channel. Helps you stay up to date with all of our latest videos. Smash that like button and have an awesome day. Cheers.